very good afternoon, grade 12 learners. My name is Mr. Simbi, and this lesson is brought to you by the Gauteng Department of Education in collaboration with Cybono Discovery Center. It is a very good thing that we can be able to meet on this Thursday afternoon as we are preparing for our paper one, that is the prelim paper that we're going to be sitting for tomorrow. I'm excited. I'm happy to have you in my class today. It is very important that we tell our friends to tell their friends as well that the accounting lesson is on. So there must be a worksheet that has been sent to you. If you have not received it, please do speak to your teacher. They must be having something that they can share together with you that can assist you as we prepare for tomorrow's paper one. Once again, welcome to our paper one revision. I'm excited as usual to have you in my class. And once again, I want to remind you to have your calculator. You need to have a pencil or a pen. You need to have somewhere to write. You need to have all your tools that you need for an exam paper. So, what are my objectives in today's lesson? Because this is a revision lesson, much of the things we've done them during the term. Remember, we've been having lessons every single Friday from the beginning of the year until today. We have been having live lessons. So today I have a couple of objectives. So my objectives for the lesson are, I'm going to speak to the structure of paper one. And I'll also do a statement of comprehensive income. I'll do a statement of financial position. I'm going to do a cash flow statement. I'm going to go to analysis and interpretation of financial information. I will not be able to do corporate governance and auditing. So I would ask that you do corporate governance in your own time. And I hope you've been doing it already, as well as your auditing. You need to look into those aspects as well. So when you look at the structure of paper one, it is very important, as the past trend has shown us, that you can have a couple of options. So there is about 4 options that we can have. So this becomes option number 1, where you have your statement of comprehensive income and the statement of financial position. And then you see that these 3 at the bottom normally would become constant. That means you have your cash flow statement and the financial indicators, your analysis and interpretation of financial statements, and your auditing and corporate governance. Normally they remain the same. So the variable therefore becomes our question 1, which can be the statement of comprehensive income and statement of financial position, as in this case. Okay, so as I was saying, it is question 1 which can be structured differently as based on previous papers that we have seen. Okay, and then it is very important that when you are faced with such a paper, you do transactions that affect both statements simultaneously. That is, if you get an adjustment, you must be able to adjust it in the statement of comprehensive income as well as in the statement of financial position. And then the next one, that is our option number 2, or our possibility number 2. You can see again that these ones will remain constant again. But when you come here, you see that you now have the statement of comprehensive income and notes. That is another possibility again. All right, so remember, possibility number 1 was the statement of comprehensive income together with the statement of financial position. But the second option is the statement of comprehensive income with notes. And then here is the third possibility. The third possibility, remember again, my bottom 3 remain constant. And then this one then varies, where you can have the statement of financial position, normally known as the balance sheet. And then you also have notes. You can see now this is different from the first 2 as well. And then the last one is where you can have the calculation of correct net profit after tax and the statement of financial position. It can be an entire statement of financial position, or the examiner can test the equity section only or the asset section only. It depends again as to what the examiner would have put in that particular paper. And once again, you can see that the bottom 3 remain constant. They don't change. It is our question 1 which can change in 4 different variables. All right. Now, how do you approach your examination paper when you see it tomorrow? Okay, so there are different ways, and I know your teacher has advised you, has given you the best way to approach a question paper. But maybe you were saying, I just need a little bit of advice as well. So let's go through it. This is how you can earn maximum marks from paper one. When you're given time to read the first 10 minutes, you must go through the question paper together with the answer book. Remember, we read these two at the same time so that we look at the question and we see how the examiner intends for us to structure the answers. And then when the invigilator then tells you to start writing, you must quickly label your formula sheet. So remember, at the back of your question paper, there's a formula sheet. And that formula sheet, you must be able to understand which particular financial indicators are there. Because remember, you're only given the formula, but you're not given the specific name. So you need to know which particular financial indicator that is at the back of the question paper. And then you respond to all questions on concepts. That is another approach as well, where you can quickly go onto your concepts and then you can collect those easy marks. And then wherever you are required to show knowledge of formats, such as when you're preparing your retained income, normally that is where you can be asked to show the format. That is your balance at the beginning, your net profit after tax, the repurchase of shares, then you come to your interim as well as final dividends. There you need to show as well. That is when you write your formats. And then start with easy questions to best manage your time. I know when I showed you the structure that the one that is variable is question one. So most people go into the exam with the intention of starting to answer question number one. But at times you may find it a bit challenging for you. But if you find it easy, then it is better you start with it. But if you find it challenging, go look for questions which you can answer very well. That will also boost your morale and your confidence as you write tomorrow's paper. So it does not necessarily mean that you have to start with the very first question that you meet. You have to go and start with the questions that you're more comfortable with. Remember, in accounting, our answer book is already structured. It's already designed in a way that you will answer particular questions in a specific area in your answer book. So I would advise you to start with easy questions and then try to adhere to time allocated in each question so that you do not waste time on a specific question and then other questions end up suffering at the same time. If a question is difficult, move on to the next one. Okay. Then, if adjustments for one question are difficult to handle, then I would advise that you go on to other questions. And then you see that your cash flow and corporate governance are options available for collecting easy marks as well. Okay, so remember, use the formula sheet to earn more marks on the cash flow and interpretation of financial information. Remember, on your cash flow, there are financial indicators that you have to calculate there on your cash flow question, which normally the examiner would keep at question number 2. All right, and then very key as well, that you need to know which amounts to add and which amounts to subtract. That is for you to earn operation marks, and know where to place brackets. All right, if it's an expense or an outflow of cash. So brackets are very key. All right, in my class I always say no brackets, no marks. So I want to encourage you, place brackets on the necessary figures. And always add amounts pre-printed in your answer book. You see, even when you do today, that the examiner at times comes and it gives you pre-printed amounts in the answer book. When you are totaling, you must remember to add those figures. And when the examiner has shaded a particular area, do not struggle trying to get those figures. It means those certain figures are also not required. When you analyze the information, quote figures and indicators and trends. I'm going to explain further when we answer this particular question. And then read questions from your question paper and answer book and always show your workings to earn part marks. Very key that you need to show your calculations as to how you arrived at the answer that will benefit you through part marks. And workings must be shown in the answer book and not on the question paper. So workings must be shown in your answer book. Okay, so very key also to note that in paper 1, tangible assets can also be assessed together with inventory valuation. I think if you've done a couple of past papers, you would have picked that there are calculations that can pertain to tangible assets. And there are questions where you are asked to calculate the value of closing stock using any of the three methods. All right. But the internal control on tangible assets is then tested in paper 2, not in paper 1. And then when you come to inventory, the closing stock of any of the three methods, which may lead us to trading stock deficit. Okay, so we're going to begin with our calculations for the day. So before we begin, we're going to take a quick 2-minute break, and then I'll see you in exactly 2 minutes. I'll see you guys in 2 minutes. All right, so maybe what we're going to do, we are going to see if we can continue, and then we take our break as we go. Okay, so we are going to see if we can continue, and then we will take a break as time will allow us. All right, so what we are going to start with is our trading section of the statement of comprehensive income. And in this one, it is very key that when we do these calculations, we have calculators. As I said earlier on, you need to have your calculators, you need to have your writing material. Everything needs to be there before you can start writing. All right, so we're just having a slight technical glitch, and I will wait as we are trying to solve this, and then as soon as it is resolved, and then we can continue. So we're going to take a quick 2-minute break, and then we are going to move on from here. So guys, I'm going to see you in exactly 2-minute time. Okay, see you in 2 minutes, guys.
Excellence is a quality you have, a quality I have. It's a quality we have when we honor what is true to us. Yes, we are gifted differently. uNkulunkulu akasinganga ngokufana. Excellence is striving for your best. Whenever you have a particular project, test, homework, uzibuze, ask yourself, is this my best? Can I put in more effort? Excellence is striving to be in the top 1% of the area in which you are gifted. And so I challenge you, in every single thing that you do, in every single area that you're gifted in, whether it's sports, it's academic, ucula, whatever that gift is, strive for excellence.
Welcome back, guys. We just had a slight challenge, but thank you for staying put so that we can continue. So before the break, we're now going to start with our calculations. I've given you several options that can come in an exam paper, and we're going to explore one of the options because of time. Like I said earlier on, we only have about 1.5 hours, and I'm not even sure if we're going to finish the entire lesson that we've prepared for you guys today. So I'm just going to focus on a few things, and then the rest you guys are going to have to look into them at your own time. So I'm going to look at the statement of comprehensive income together with the statement of financial position. I would want to encourage you that when the lesson is over, go and look at the other options that I spoke of that will allow you to be ready if any of the options do present themselves in an exam. Okay, so you'd see that when you are tested on a statement of comprehensive income, it's split into different sections. So for this lesson, I wanted to show you some of the possible adjustments that can come. So I have about 3 options that can present themselves here. So the first one is here. And we are given information and it reads, and extract balances and totals from the records on 28 February 2023. And then we have sales and cost of sales. And then we are told information number 1, the business uses a markup of 120% on cost of bicycles. Trade discounts totaling to 336,000 have been granted and recorded. This is an adjustment that some of you might have seen before, where you are given the sales amount and you are given trade discount, and you now have to calculate your cost of sales together with your gross profit. How would you do that? This is how you would do that. So please make sure you have your calculator close to you. When you come to cost of sales, you have to first start with the sales amount that you're given, which is your 21,017,200. And then you say that amount, you then come and you're going to add your trade discounts, because in that sales amount, trade discount was already taken out. So you come and you add your trade discount, which is 336,000 over there. And then once you have done that, if you add that, because of time today, I'll not be able to press my calculator, but you should get your 21,353,200. So you simply added these 2 figures here, and then you get the 21,353,200. I just put it at the top there, but you understand that I've calculated it down here. And then when you get that figure now, that simply means you now have your sales figure before the trade discount. Then you can get your cost of sales, where you want 100 and what you have. Remember, here we're told the business uses a markup of 120, and we understand that cost is always 100%. And then markup is given at 120%. And then selling price would therefore become 220%. So what we have is 220. So it becomes 100 over 220. And then if you punch that in your calculator, you should get an amount that is 9,706,000. 9,706,000. Then if you can get the difference between your sales and your cost of sales, it will give you gross profit, which is 11,311,200. So that becomes your gross profit. So this is one of the options that normally we have seen in most exam papers. So I have done this one. This one includes your trade discount. Trade discount. Let's see if I can explore again another option that we might have. Let's go to the next one. The next one then reads sales, cost of sales. So with the previous one, remember, we had the sales and we do not have cost of sales. In this one, we are having cost of sales and don't have sales. Remember, it's possible that the examiner can test either of these ones, or the examiner cannot test the trading section at all. It's also a possibility that the trading section can also be ignored, and then you start further down. I've seen papers where those amounts are already put in, so you don't have to calculate that particular area. It's very possible as well. So we're going to come here and we're going to now calculate our sales. So we are given cost of sales, which is 4,780,900. And we are told The company maintains a 60% on cost. Note that goods costing 115,000 included in the cost of sales, so they are in here, were sold at a markup of 40% on cost to internal employees. So the examiner can play around with these ones. I've seen one where they say they were sold at 20% below cost. These ones are not sold below cost. They are sold at a different markup. Instead of 60, they're being sold at 40. So you need to expose yourself to different calculations as these ones as well. So you come here and you now say your 4,780,900. This is your cost of sales, 4,780,900. And then we are told that there are goods that have a cost of 115,000 and they're in that amount. So I can take these goods out. 115,000. I can take that amount out. And then once I take that amount out, I'm going to remain now with my cost of sales for the goods which were sold at 60%. So the difference between those amounts is going to be 4,665,000. 4,665,900. Okay, and then we know that these are the goods that are being sold at 160 over 100. All right, and then if you punch that in your calculator, I think you're going to end up with 7,465,000. 7,465,440. You would have done this part here. And then you come and then you now say that amount. Then you say plus. Remember, we have goods which have a cost price of 115,000. And these goods were not sold at the 60% markup as others. They were sold at only 40%. So you come here, then you say these goods of 115,000 multiplied by 140 over 100. And then that is then going to give us an amount which is 161,000. So I come here, then I say plus 161,000. I'm just squeezing it at the top here so that you can see what I'm doing. So I end up adding my 7,465,440 plus the 161,000. Then that will give us, okay, so maybe to slow things down, let me bring the calculator now so that we can be able to calculate together. Let me see if I can get my adding machine back. Today, technical glitches, so I can't find my calculator. All right, let me see if I can find my adding machine. Okay, not here again. All right, okay, we're gonna get it after the second break. So if I say my 7,465,440 plus the 161,000, that will give me 7 million. 7 million, how much? 7,626. 7,626,440. That becomes your sales now. And then when you get the difference between these two, you end up with a gross profit that is your 2,845,540. That therefore becomes your gross profit. So I showed you two options that can be brought in an exam. And these two options, number one was where you're given trade discount. Here we have goods that are sold below a particular markup. So we had two different types of goods. We had one that was sold at 60% on cost, and we have others that were sold at 40% on cost. Let's do the last one, and then we see. E-trades. The following adjustments must still be taken into account. So we are given sales here, and the sales is 12 million. So I'm coming here to open my bracket, which is my 12,171,200. 12,171,200. Stock taking on 28 February 2025 reflected a trading stock deficit of 22,150. So we're told that there's a deficit, and this deficit was calculated without considering the following. What we want is this part here. Merchandise of 31,200 returned by M. Frede, a debtor. So this is merchandise returned by a debtor on 28 February was not recorded. All right, the goods returned were placed back in stock. Ebony Limited maintains a markup of 40%. on all goods. So what we're going to do, we're going to come here and we're going to say these goods were returned. So these are our debtors' allowances. So I'm simply going to come here and I'm going to say minus. Minus what? 31,200. Simple as that. So I'm going to say 12,171,200 minus 31.2. And that's going to give me 12,140,000. 12,140,000. And then I'll get my cost of sales. To get my cost of sales, I have my 12,140,000. 12,140,000. And I know that the markup in this company is at 60%. So I want 100 over 160 because I want cost. And then I'm going to end up with 7,587,500. And then I get the difference between these two. That gives me my gross profit, which is 4,552,000. 4,552,500. This is three options that I just brought. If a trading section can be tested, there are other options that an examiner can also exploit. And once again, I said there is another option again where that section can just be ignored completely. Dear learners, we're going to take again another 2-minute break just so I can find my calculator. And when we continue, at least I'll be having my aiding machine with me. See you in 2 minutes.
Excellence. Excellence is a habit. Excellence is a quality you have, a quality I have. It's a quality we have when we honor what is true to us. Yes, we are gifted differently. uNkulunkulu akasinganga ngokufana. Excellence is striving for your best. Whenever you have a particular project, test, homework, uzibuze, ask yourself, is this my best? Can I put in more effort? Excellence is striving to be in the top 1% of the area in which you are gifted. And so I challenge you, in every single thing that you do, in every single area that you're gifted in, whether it's sports, it's academic, ucula, whatever that gift is, strive for excellence.
And welcome back. Before the break, we did certain calculations. Remember, we looked at the trading section. So we're going to go now and we're going to look at other income, and we're going to see what are the possible transactions that can come on other income. So on other income, we can have transactions such as your commission income, your fee income, and we are going to look at these transactions. All right. So we're going to have our answer book for the statement of comprehensive income, and we are going to make adjustments that will go both to the statement of comprehensive income and the statement of financial position. Okay, so the first one says commission income 41,000 is owed to the business. So this is an accrued expense. So it simply means I'm going to come here and I'm going to open my bracket. I'm going to come, remember, I'm going to say commission income. So I'm coming here and I'm going to say commission income. And on my commission income, I'm going to open bracket. And how much do I have here? 277,000. I have my 277,000 here. And then I say there's commission income of 41,000, which is odd. So I'm going to come and add my 41,000 over there. Okay, and then I know once this is accrued income, it should go to your trade and other receivables. So I'll come to my current assets under my trade and other receivables. I should have my 41,000. Okay, so this is how I would have done it. I would have gone to my statement of comprehensive income and also adjusted onto my statement of financial position like that. That is number one. Let's go on to the next adjustment. That is on fee income. On fee income. It reads, fee income includes 47,150 for February and March. So this fee income of 47,150 is for February and March. Very key. Not for the entire financial year. For February and March. But remember that we are told here that fee income increased by 5% on 1 March 2023. But the financial year is ending on 28 February 2023. So we have 1 month which we have received income in advance. We know that the fee income, before it increased, that fee income was 100%. And then we received it for 1 month. So that's 100. You know this method already. And then after increase, it increased by 5%. So it becomes 105, 105%. For how many months? For 1 month again. So that becomes 105. In total, we're dealing with 205. The 205%, this is equivalent now to the 47,150 that we have received. The 47,150 that we have received. So what we want now is the month of March, which has the increase, because that's the month that we've received in advance. So we come here, we say 105 over 205. Then we multiply this by 47,150. Let's see if we can do that. So we finally have our machine back. So it's 47,150. Then we multiply that by 105, and that should be over 205. And that would therefore give us 24,150. So we end up with 24,150. What is this? This is income received in advance. So I'll come here and I'll say fee income. I open my bracket. My fee income in the trial balance is 303,000. And then I'm going to subtract the income received in advance. And the income received in advance is 24,150. And then I know if I receive income in advance, it should go to trade and other payables. So I come here and then I'm going to add, because it's income received in advance. So I'm going to come and say 24,150. This is how I would have done these particular amounts. Remember, we're looking at the other income section. What other adjustments can be tested on the other income? It is when we dispose an asset and you have what we call profit on sale of an asset. Okay, let's look at this. And as we do that, we're going to also look at calculations that pertain to depreciation. So the information reads, an old vehicle was traded in on 1 September 2023 for a new vehicle costing 320. Very key that you understand that the 320 is for a new vehicle. Then the trading value received was 153,660. So this is the price at which we have disposed our old vehicle for them. The trade-in value received, that is the amount that we've received when we've disposed our old vehicle. The following extract from the vehicle sold was taken from the fixed asset register, and we're given a cost price of 240,000. I understand that if I come in and say cost, and I say minus accumulated depreciation, it should give me what we call carrying value. We should be okay here. So if I take my cost, which is my 240,000 here, I subtract my accumulated depreciation, which is 73,600. 73,600. It should give me my carrying value. And my carrying value here becomes 166,400. This is the carrying value at the beginning of the year. Now, we know that this asset was disposed on the 1st of September. That means we used it from the month of March. So we need to calculate depreciation then. In calculating depreciation, we are using the diminishing balance method. With the diminishing balance method, we calculate depreciation on carrying value. Means I'm going to come in, I'm going to say 166,400. Then I say multiply by 20 over 100, 20%. All right, remember that one there. For how many months did we have this? We have to count right from the beginning of the financial year until the day of disposal. The financial year begins in March. Remember, it's ending in February. So we're going to say March, April, May, June, July, August. Do we count September? No, because it's the 1st of September. How many months are we going to get there? We're going to end up with 6 months. So it's going to be 6 over 12. If you quickly punch that in your calculator, you should get depreciation, which is 16,640. That becomes your depreciation for this year, for the 6 months that we have had this particular asset for. It therefore means if I had that, I can simply come again and say my cost is still 240. Then I can say minus my accumulated depreciation, which was 73.6, but we have now added 16,640, which in total would give us 90,240. It would then give us our carrying value, which is 149,760. That becomes the carrying value on the date of disposal. Now, we want to ascertain now whether we made profit or loss. Now, there's a quicker way to determine if we made either profit or loss. You simply say your selling price or the value that we received from the trade-in. All right? Then we say minus the carrying value. And whatever your calculator gives you, if your calculator gives you a positive amount, that's a profit. If your calculator gives you a negative amount, that's a loss. Okay, let's see. If we were given a trade-in value of 153, so I'm coming here to say 153,660. 153,660 minus the carrying value of 149,760. And then we come here. Let's see what we're going to end up with. 153,660 minus 149,760. And then that's going to give you 3.9. And can you see that that 3.9 is a positive figure? So we're going to end up with 3,900. That is a positive 3.9. Once it's a positive, that makes it profit. So I'm going to come here and I'm going to say I now have profit on sale of asset. Profit on sale of asset. And that is 3,900. Profit on sale of asset 3.9. So this is another income that you can see on other income. I think I still have about 2 more. Let's quickly go through them and then we go on to our operating expenses. Okay, so let's quickly go. Provision for bad debts adjustment. Okay, so let's quickly do this one. All right, so if we are given the provision for bad debts adjustment, here we were given a percentage. But the examiner can play around with this one. The examiner can start with an invoice that was not recorded, and you have to record that particular invoice, or debtors allowances, you have to record those debtors allowances. Then you come to the provision for bad debts. So you have to do your adjustments in a particular order. Whether you're given a statement of comprehensive income or the correct net profit calculation, either way, you will still have to do them in a particular way if you are going to be allowed to calculate this percentage and there is an amount in the trial balance. Okay, so here we're told provision for bad debts must be adjusted to. So the key word here is to 5% of the outstanding debtors. So our debtors are here. How much is that? That is our 516,600. 516,600. And we want to get 5%. All right, we want to get 5% of that. So we're going to come and we're going to say, here it's going to be 516,600. And we want to get 5%. So that's our 5. And that's going to give us 25,830. 25,830. 830. That is the provision for bad debts amount here. So if you were preparing the statement of financial position, you would have to come to trade and other receivables, and you would have to come and say 516,600, and then you subtract your 25,830, like that there. But what would you do in your statement of comprehensive income? In your statement of comprehensive income, you would have to record either an increase or a decrease. How do you know? You must have understanding already that an increase in provision for bad debts is an expense. When provision for bad debts increases, it is an expense. But when provision for bad debts decreases, then it is income. How do I know whether it has increased or decreased? You simply say the last year's or the previous year's amount. We are talking 2023. The 2023 provision for bad debts was 29,520. And this year's provision, this year we're talking 2024. And the provision for bad debts for this year is 25,830. And then we get the difference. So if I come here on my calculator, I'm going to say 29,520, then I say minus 25,830, like that. And then the difference becomes 3,690, 3,690. And that amount, you can see here, it has gone down from 29 to 25. It has gone down. Once it has decreased, then we're dealing with income. So I'm going to come here and I'm going to say provision for bad debts adjustment. I'm going to show my calculation that I'm saying 29,520 minus, I'm going to subtract my 25,830, and then I'm going to end up with 3,690. Forgive my bad handwriting. You can see it could not fit there properly, but I know you guys write neatly, and if such an adjustment is presented, you should be able to do it very, very neatly. So what is the next adjustment that we can find on other income? It can be an adjustment on rent income. So we have done one, which was, I think, have we done one already? Yes, I think we looked at one already. So let's look at another one again. And it reads, a tenant is renting an office from Ivory Park Limited. Rent for this office has been received until 30 April. Remember, the financial year ends on 29 February 2024. This is the end. And we are told that this particular tenant has rented, and we have received rent from them until 30 April 2024. So instead of the 12 months, because if it begins on the 1st of March 2023, it should end on the 28th of February 2024. That constitutes the 12 months for the financial year. We're still okay. And then we are told that rent was decreased by 8% on 1 December. Okay, but very key that we've received until 30 April. So we have 30 April 2024. So we've received rent for March and April, making them how many months? 2 months. So in total, we're dealing with 14 months. Okay. So for these 14 months, we understand that there was a time when rent had not yet decreased, when rent was at 100%. So when rent was at 100%, for how many months was that? We're going to count now. We're going to count from the beginning, which is going to be from March. So it's going to be March, April, May, June, July, August, September, October, November. Because rent was increased on the 1st of December. So that gives us 9 months over here. Times 9, that gives you 900. And then we understand that we've received for 14 months here. So here we're 14 here. So I can simply say 14 minus 9. That is where I get my 5 here. And then how much is that going to be now? Because it is 100 before the decrease. So 100 minus 8 gives me 92. So here it's going to be 92 times 5. And then that would give me how much? 460. So I add these amounts now. I have 900 and I have 460. That will give me 1,360 over there like that. Now, what do I want? I want rent for March and April. March and April are falling within the period after the decrease. So March and April, it's going to be 92. So several ways in which one could have done this. So I can simply say 92 multiplied by 2. All right, let's see if I can get a calculator and say 92 multiplied by 2. And that's going to give me 184. So here I have 184. And then I want 184. I have 1,360. And then I multiply this by the total, which is my 158,100. 158,100. And if I punch that in my calculator now, how much do I get? If I say 184 over 1,360 multiplied by 158,100, I should get 21,390. That is my income received in advance. Income received in advance for the month of March and April. So I'll come in, then I'll say rent income. Rent income. I open my bracket and I'll say 158,100. Then I subtract the income received in advance, which is 21,390. Like that. I subtract the income received in advance. I close my bracket. And then I will come in now say, if I've received income in advance, that must go to trade and other payables. It is a liability. So I'll come to my trade and other payables and I'll also say plus how much? 21,390. Like that. Okay, we've covered a couple of other income. Let's quickly now go to our operating expenses. I'm going to give you 2 minutes. And guys, I see you after 2 minutes.
I want you to ask yourself these 3 questions. Number 1, what do I want? Do I want to become an A student or do I want to become an average student? Number 2, I want you to ask yourself, how do you plan on getting there? Are you going to put more extra hours or are you going to just sleep? Number 3, who will be with you in this journey? Because it is important that we associate ourselves with students who have the same vision as us, who want to become A students, who want to put in the...
Welcome back, guys. All right, so we're going to move on to the next part. Remember, we have done other income. Let's go if we can look at our operating expenses. And we're going to look at a few adjustments before we can move on to the next part. All right, so the first part that we're going to look at, or the first adjustment that we're going to look at, has to do with trading stock deficit, trading stock surplus. All right, so here is our statement of comprehensive income, and we don't forget our statement of financial position. Either way, even if it comes as the statement of comprehensive income alone, you will be covered. If it comes as correct net profit, you'll be covered. If it comes as statement of financial position alone, you'll still be covered. Hence, I'm trying to cover all these particular areas. So the information reads, trading physical stock taking on 29 February 2024 revealed the following. Trading stock 647,100. So what happens here is we have trading stock according to the business records, which is 654,500. 654,500. But according to the physical stock taking, it is 647,100. All right, so it simply means our stock on hand is less. When your trading stock on hand is less than the amount in a trial balance, you are having a trading stock deficit, because according to our business books, we are having stock of 654,500. But when we physically count, we realize we don't have 654,500. We only have 647,100. So we have a trading stock deficit, which therefore becomes an expense. So I'm coming here to say trading stock deficit. I open my bracket and I'll now say the amount that I have according to the business records, which is my 654,500, and then I subtract what we have on hand, which is 647,100. Okay, let's see if we can get the adding machine. Where are you, my friend? There you are. So we're going to say 654,500. 654,500. Then we're going to subtract my 647,100. And then we're going to end up with 7,400. And that becomes my trading stock deficit. So the moment your amount in the trial balance is more than the one on hand, it's a trading stock deficit. Or if you say the amount on hand is less, once the amount on hand is less, then it's a trading stock deficit. And the opposite is true, where you have a trading stock surplus, where what we have counted physically is more than what is in the business records. We have a trading stock surplus. How do we record this? In the statement of financial position, we come under our current assets, and we're going to now say, here is our inventory. All right, and we're going to open our bracket, and we're now going to say 647,100, and then we're going to add our packing materials. But let's get to that one now. When we come here, we see that we have packing materials in the totals here. We have packing materials in the totals. And we also have packing materials used during the year. What do we record where? When you see packing materials used, the used amount is what we show under our operating expense. So it is the used amount. So I come here, then I'm going to say packing material. Here I'm going to come and I'm going to record the used amount. And my packing material used is how much? 58,700. But in the trial balance, I had 66,000. 66,550. But you're telling me that I must record the used amount of 58,700. That should come in the final amount here, 58.7. So the difference between these two now is the packing materials on hand. So you can see that the examiner here has changed, because at times they give you packing materials on hand. So here I was given the packing materials in the list of balances, and I'm also given the packing materials used. I know my used comes here. So I must now get the packing materials on hand. How much was left? And to get that one now, we'll come and then we say our packing materials in the list of balances, that's 66,550. And then we subtract our 58,700. Our 58,700. And then we end up with 7,000. 850. That becomes our packing materials on hand. So I'm going to say minus 7,850. That becomes, okay, we said, okay, minus 7,850. Let's get a calculator again. There you are. 7,850 minus 7,850 over there. We close the bracket. So if you say that minus that, it should give you that one there. And when we come to the statement of financial position, we're now saying the inventory on hand, 647,100, 647,100. Then we add the on hand. The on hand was 7,850. So I come in, then I say plus 7,850, like that. That is how you would adjust for such an adjustment. Okay, we're going to do one more before we move on to the next aspect. Let's go. This one has a bit more adjustment. So here's where we're going to record. I have my statement of financial position here. Are you guys ready? If you're ready, let's go. Okay, so let's do the first one. Remember, the financial year is ending on the 29th of February 2024. And we are given certain expenses here. So the first one that we're given is insurance. So I would come here and I would always open my bracket here. Insurance, I open my bracket. That is 100, 800. Then the next one is rent income. We've covered rent income, okay? And then the next one is director's fees. Okay, we're not going to touch interest income for now. So we're going to come, then we're going to say also director's fees. So I'm going to come and say director's fees. Director's fees here. And I don't have an amount. Okay. And then we also have salaries and wages. Salaries and wages. Someone was saying, Mr. Simbi, you skipped salaries and wages. There it is. Salaries and wages. That is 1,425,600. So I have these three amounts. Salaries and wages. I have my insurance. I have my director's fees. These are the three adjustments. Let's see if we can crack these ones. What do we start with? First things first, monthly insurance. It reads, monthly insurance premiums were fixed for the past 3 years. Monthly insurance premiums were fixed for the past 3 years and were paid up to 31 May. And these were paid up to 31 May. So how much was paid? Remember, timeline, very key. The financial year begins on the 1st of March 2023 and it should end. When is it ending? 29 February 2024. How many months is that? These are 12 months. And then you are then told we paid until May. That means we paid for March, April, May. How many more months here? That's 3 more months. So if you say 12 plus 3, that should give you 15 months. So if the monthly insurance premiums were fixed, they never changed. No increase, no decrease. But they were paid for the past 3 years. They're simply trying to tell us from the past we've been paying. And we paid until 31 May. So we're going to come and then we're going to say insurance, which is your 100, 800. Let's divide that by 15. Let's see how much we're going to get. So we're going to say 100, 800. We divide by 15. And that is going to give us 6,720. So we're going to get 6,720. Our problem is these 3 months, March, April, May. So we multiply this by 3. That is our problem there, those 3 months. We multiply by 3. And that's going to give us 20,160. 20,160. What is this 20,160? That becomes our prepaid expense. So I come here, then I say on insurance minus the 20,160. And where do I go? Trade and other receivables. And once I prepare an expense, it goes to receivables. So I come and say 20,160 over there. Let me go to the next one. So we're done there. Let's come here now. One employee was omitted from the salaries journal for February. So here we know we're owing one employee because he was omitted from the salaries journal of February 2024. His net monthly salary was 19,340. So we have 19,340, which was his net salary. And that was after we had taken out deductions, 35% we made. So 35% was for his pension and personal tax, and 2.5 for medical aid. So what I'm going to do, I'm going to come and I'm going to add the 2.5 for my medical aid. So I have my 19,350 plus my 2.5, and that's going to give me now 21,840. I know that if my salary is to be there, that is my gross salary, my gross has to be 100%. And then we have deductions. Are we together? So what I have done now, I have added the other deduction on to my net salary here, so that I can be able to use the 35% that I have there. So my gross is 100, and now I know that I have deductions of 35%. And if I get all of this, I should end up with my net, and my net should be 65%. And according to what I have done in the calculation here, where I have my net and I added one of the rand value deductions, I would therefore end up with 21,840 here. So you then come and you say, what is it that you want? We want the gross, which is 100. So I'm going to come and I'm going to say, I want 100. What I have is 65. And that is 21,840. Then I put that on to my calculator. Let's see what it's going to give us if we do that. So what I want is 100. And what I have is 65. And then we're going to multiply that by 21,840. And then that is going to give me 33,600. So I'm going to come here and I'm going to say that's 33,600. That is my gross. So I'm going to come here and I'm going to say on salaries and wages plus 33.6. And I know once an employee is left out, we are owing that. So I'm coming here, trading other payables plus 33.6. I just took the cost to company, the entire gross amount, 33.6. Then the statement continues and it says, the employer contributes 10% of his gross salary on behalf of the employee. That means I'll take the 33.6 and I get 10% of that. And if you punch that in your calculator, you should get 3,360. What is that? That becomes the employer's contribution. So, and then we come, and then we're going to say plus 3,360. And I do the same down here, plus 3,360. We do the last one now, which has to do with directors, and it reads, the company had 2 directors, all right, and then who received a combined annual fee of 1,065,200. This is after their monthly fees were increased by 5,800 each on the 1st of August. A third director joined the company on the 1st of November 2023 and received the same monthly fee as the other directors, but it excludes the increase of 5.8 per month. How do we do this one? Let's see. So we understand the first thing we have to do is to take out the increase. That would be the easiest way. We have one director who's getting an increase of 5.8. So it's going to be 5.8 per director, the increase. And we know that we have 2 directors. All right. So if it's 5.8 times 2, so if you say 5.8 times 2, that will give us 11.6. So we have 11.6 here. Now, we are told that this increase has been there and effected from the 1st of August 2023. So we're now going to count. Then we're going to say from the month of August. So it's going to be August, September, October, November, December, January, February. For how many months? For 7 months. So we come here, then we multiply this by 7. Let's see. If we do that, what we're going to have. Then we multiply by 7. Then we're going to end up with 81,200. So if we come here, we're going to end up with 81,200 over here. Okay, let me just create some space here. All right. Let me create some space for myself. Let's take that one out so I can have somewhere to write on. Okay. Okay. I'm also giving you time to catch up with me. All right. So we have 81.2. That is the increase. So if I take my 1,065,200 and I subtract that increase of 81,200, I now have my director's fees without an increase, and that is 984,000. And then I now say 984,000 is for 2 directors for a year. That means in terms of months, we're going to end up with 24 months here because it's 2 directors for the financial year 12 months. That's 24 months. So the 984 is for 24 months over there. So then we come here and we're now going to say, calculator, it's going to be 984,000, and then we're going to divide by 24. And that's going to give us 41,000. So we end up with 41,000 per director per month. This is 41,000 per director per month. And then we now say that 41,000 is what this new director is going to receive, because he's going to receive it excluding the increase. So the new director is going to be getting 41,000, and he was employed on the 1st of November. He joined in November. So he's been there November, December, January, February for 4 months. You multiply that by 4, that will give you 164,000. So I come here onto my director's fees. I'll now come and I'll say my 1,065,200, 1,065,200, and then I add my 164,000 like that. That is how I would do that. Company had 2 directors received, after their monthly fees were increased, a 3rd director joined the company and received the same fee as the other directors, excluding the increase. Some of you were saying, Mr. Simbi, please do the income tax adjustments. So I'm going to quickly come and do the income tax adjustment over here. Okay, here it is. So we have our income tax adjustment, and we want to see how does it affect the statement of comprehensive income as well as the statement of financial position. Whether you're doing the correct net profit calculation, this part normally would remain the same. So whether you are getting a complete statement of comprehensive income or the correct net profit calculation, this part here would normally be the same. So what we were given here is an amount for tax is still owed to SARS. An amount for tax is still owed to SARS. So during the year, we made 2 provisional tax payments, and they totaled to 1,049,000. These are the provisional tax payments that we've made, and these are payments. So we have paid, payments paid. And we are then told that the income tax for the year is supposed to be 1,152,000, but we have paid. So if we come and then we say what we have paid, then we subtract what we should have paid. Then it tells us what we must still pay. I don't know if you get what I'm saying. Okay, so we have paid, these are the provisional payments. We have paid 1,049,000. That is what we've paid. You find that in the list of balances. And then you have what you must pay, what we must pay. You find that now in the statement of comprehensive income. That is your 1,152,000. So it simply means we must still pay, because if you get the difference between these two figures now, the difference, remember, it's going to be your 1,152,000, and then you're subtracting 1,049,000. 1,049, 1049, 1049, 1,049,000. So we must pay 103,000. So, and we call that SARS income tax. SARS income tax. We call that SARS income tax, and that is 103,000. Like that. So that is one way an examiner can bring this particular adjustment. Let's see another option that can be brought to us. Again, we are here and we are told net profit after tax is 992,160, which is over here. It was calculated after taking into account all the adjustments above. Income tax is calculated at 28%. So your income tax is 28%. Net profit before, that's 100. Net profit after, that's 72. So what we want here is income tax. So we want 28. What we have is 72. And we multiply that by 992,160. So we'll come here and then we'll now say what we want is 28. And what we have is 72. And then we multiply that by 992,160. 992,160. And that should give us 385,840. So you come here, in your brackets, you have 385,840. That becomes your income tax. And then you can get your net profit before tax here, where you can calculate going up and then you change the sign. So here you end up with 1,378,000. 1,378,000. But once we are here, we should then do the same again. And then we are saying our provisional tax payments, we paid 340 when we should have paid 385. We must still pay them because our provisional tax payments are less. Another formula maybe which can assist you is to simply say your provisional payments, and then you subtract your income tax amount in the statement of comprehensive income, your income tax in the statement of comprehensive income, and then you trust the sign. If it is a plus, it means it is trading other receivables. If it is a minus, it is trading other payables. So we will now come, then we say our provisional payments is 340. Provisional payments is 340. And the income tax is 385,840. 385,840. So let's see if we can bring the calculator. Then we say 340,000, 340,000. That is the provisional payments minus 385,840. 385,840. And then you end up with a negative 45,840. Once it's a negative, trade in other payables. A negative 85,840. You know you must still pay. So you're going to come here and you say SARS income tax. And your SARS income tax, you are now having 85,840. Like that. Did I get 85? 85,840. No, I punched in my calculator incorrectly there. Let's fix it. Thank you, guys. Let's fix it. All right, here, let's fix it there. Let's fix it. Let's punch it in again. Let's punch it in again. Let's punch it in again. All right, so we are going to say on the calculator, 45,840. 45,840. I don't know where I got the 85. Okay, 45,840. 45,840. 45,840. 45,840. I'm trying to race against time. If you check on your clocks, we're left with 10 minutes of this lesson, and I have tons of information to go through. But you know what? Let's see. Maybe they'll allow us to stay a little bit longer, and then maybe I might push a little bit more content. Let's look at the next option that can be tested on your income tax. What is the other option that can be tested? All right. So here we're given income tax is calculated at 30% of net profit. So here you're given income tax then. All right. And then you are told here. So remember that is what? 30%. So here this is always 100% and this becomes 70%. So it becomes easier to get this one. You want 70 and you have 30. Multiply by 397,800. How much is that going to give you? 928,200. And you can do the bottom up again to get that one there, which is 1,326,000. And then again, you can quickly get this one again. So remember, it is, as we said in the previous time, it is your provisional payments, and then you subtract your income tax here, which is in the statement of comprehensive income. So we're going to say 363,100, and then we're going to subtract our 397,800. Your calculator is definitely going to give you a negative, and that's a negative 34.7. So you're going to come again here, and then you're going to have your SARS income tax, which is your 34.7. Okay, so good learners, we're going to take again 1 minute break, and I see you after this 1 minute break. Okay, guys, so during the short break, I was trying to negotiate if we can stay in the studio a little bit longer. So they said, okay, they're going to allow me a little bit longer. So let's see how far we can push. But you need to have your calculators ready so that when I do calculations here, you do calculations there. So we're not going to end at 4. We're just going to push it a little bit further. Let's see how far we can go. Okay, cool. So the next one, I'm going to do certain adjustments that pertain to the statement of financial position only. Certain adjustments that will not affect the statement of comprehensive income or the correct net profit calculation for that matter. Okay. So the first one that we're going to have here is transfer a debtor's debit balance. You have seen one like this, isn't it? Okay. Transfer a debtor's debit balance. So what I do every time when I see this, I open my quick T accounts. Here's my 2 T accounts. The first one, I call it my debtor's ledger. So on the debit side, it's going to have a plus. On the credit side, it's going to have a minus. Debtor, an asset. So it increases on the debit side. Plus, the signs are key in this matter. Signs are very key. The plus is of crucial importance. So don't just write debit and credit. Okay, I'm going to speak slowly then. Don't just write debit or credit. You need to put the plus. You need to put the minus as well. We good? Okay, then we come to the creditor's ledger, where on the credit side, that's a plus, it's a liability. And then on the debit side, that's a minus. We're good. Now, transfer a debit balance of 2.7. So I have my 2.7 here. That's a debit balance. And we want to transfer this from the debtor's ledger to his account in the creditor's ledger. if you're going to transfer an amount from a particular account, you put it on the opposite side. So I'm going to come here and I'm going to say 2.7 over here. So I have an account credited. To complete double entry, I'm going to come and I'm going to debit here 2.7. So you see, and what I want are these signs. That means I'll come to my current assets and I'm going to say trade and other receivables. All right. Okay, let me write my trade and other receivables here. Trade and other receivables. I'm going to put it here. And I'm going to say on my trade and other receivables, I'm going to say minus, because the sign is a minus. The sign is a minus. So I'm going to say minus 2.7 over here. And then I must do the same to my trade and other payables. What sign do I have there? A minus sign. So I come and say minus 2.7. So your mind is going to try and tell you, no, go and add somewhere. No. Don't add anywhere, because your signs that you want is a minus and a minus. If it happens that the examiner comes and says, transfer a data with a credit balance, you simply come again. If they change this and they have a credit balance, you simply change again. You come, you open your two accounts, debtors ledger and debit, it's a plus, credit, it's a minus. And if the amount is here, and then you simply bring it here, you bring it again there, creditors ledger. If they don't say transfer a debtor, they can say transfer a creditor's balance with a debit balance, a creditor with a debit balance. They can come and say transfer a creditor's debit balance. It's another option as well. Or they can have a creditor with a credit balance being transferred again. These are all options that the examiner can bring. What you just have to do is through your T account, go to where they are, and then transfer it on the opposite end. And then life becomes Lula from there. Number 8. It says, the company has invested in 3 fixed deposits of equal value. Equal value. One of the fixed deposits will mature on the 31st of May. Now, where we are, the financial year began on the 1st of March, the year 2022. And the financial year ends on the 28th of February, 2023. Now, we are here. This is where we are. But we are being told that on this fixed deposit here, there is 3 investments and they're of equal value. So that means I come here, I have my 1.5 million here, and there's 3 fixed deposits in there. One of them, that simply means I'm saying 1.5 divided by 3, which gives me 500,000 there. One of those fixed deposits will mature when? On the 31st of May. Now, you have non-current assets here. These are assets that exist for 12 months and more. But you also have what we call current assets. These are assets that are there for 12 months and less. The moment you have a non-current asset that is going to be converted into cash within the next 12 months, it therefore ceases. It stops being a non-current asset and then it becomes a current asset. So we are told a third of this is going to mature. So you're going to come and you take that 500, you subtract it from here. 500,000 protruded. So you're going to end up here with only 1 million. And then that 500,000 that is going to mature, you bring it now to what we call cash and cash equivalents. You open bracket and then you say plus 500,000. Because it is an investment that is going to mature within the next 12 months. So within the next 12 months, it will no longer be a non-current asset. It will become a current asset. So that is what we do over there. Okay, so this was one adjustment, two adjustments rather, that we did which pertain to our statement of financial position. Okay, let's go and see if we can have more adjustments that only we look at the statement of financial position. Okay, so you will see that time and again, the examiner will bring a statement of financial position and include financial indicators. That's why at the very beginning of this session, I said you must know your formula sheet. And the moment you get in there, when you look at the formula sheet right at the back, quickly write in the names of the financial indicators that you still remember, so that when you meet with such a question, you know already, if I'm given debt equity ratio, the formula is non-current liabilities as to shareholders' equity. So we are given information here, and we're told interim dividends paid. They will not appear anywhere on your statement of financial position, but final dividends, they say due. So these are your shareholders for dividends. So I'm going to come here, just under my current portion of loan, I'm going to say shareholders for dividends. Okay, and that's your 2,640,000. At times you can be given this, and you are required to open your retained income note. And then you can still use this information to prepare your retained income note. Or you can be given the retained income note, and then you can get information from there to place in your statement of financial position. So at times the examiner can give you some of this information, and then you simply need to take it and place it in the rightful place. It depends with what you are given. Let's go on to the next one. Then we are told the debt equity ratio on 28 February 2023 is 0.2:1. I now know the formula for my debt equity. Remember, it is the debt equity. The debt equity. That means my formula is going to be non-current liability as to my shareholders' equity. So what do I have? The examiner has given me something here. What do I have? I have my non-current liabilities here. So I have my, I have my 4,512,550. Very tricky amount. 4,512,550 as to my shareholders' equity. And the answer was 0.2 as to 1. So I need to get the shareholders' equity. What do I do when I get here? I cross multiply. That means I'm going to say my 4,512,550 is therefore equal to 0.2 shareholders' equity. And to get that one, I divide everything now by 0.2. I divide this by 0.2. Okay, let's see, Mr. Adding Machine, there you are, my good friend. 4,512,550. I divide you by 0.2. I'll get 22,562,750. Okay, that's my shareholders' equity. So let's bring it here. Say it again. All right, that was 22,562,750. So if figures are this big, you need to bring a calculator that you're used to in an exam. Don't borrow a calculator on the morning of the exam. That means here, I can get my retained income there, because I know if I say ordinary share capital plus retained income, it must give me my ordinary shareholders' equity. So if I take the difference between my shareholders' equity and my ordinary share capital, I'll end up with 2,562,750, and that becomes my retained income. So at times you may think there is missing information. Not at all. You just need to know how to get that particular information. So if I don't use the debt equity here, perhaps I can bring with the net asset value per share. And then I give you the number of shares. So you must be able now to calculate. If I'm given the NAV and then I'm given the number of shares, I must still be able to calculate my equity as well. Okay, let's go on to the next calculation. All right, so this one is a bit lengthy, but we've been granted a few more minutes, so let's make use of that time. The information here, we are given information that has to do with share capital and dividends. Okay, and then we're told interim dividends were not declared during the financial year. Okay, and then final dividends of 25 cents per share were declared on 29 February to all shareholders in the share register. So final dividends, that is talking to my what? Shareholders for dividends. So I know the first thing I'm going to come here with is trade and other payables. And then after that, I can bring my shareholders. Shareholders for dividends. I'm going to open my bracket. How many shares do I give this final dividends to? It is given to all shares in the share register. And according to 29 February 2024, I have 1,890,000 shares in issue. So I'm going to take those ones then. So I'm going to come in and I'm going to say 1,890,000 and multiply by 25 cents. And then, do you see the 25? Is it clear? Okay. It is clear. 1,890,000 multiplied by 25 cents. Okay. How much do you get? 472,500. That becomes my shareholders for dividends. And we meet again a similar adjustment. You remember, we passed this road before. What do they say? A debtor with a debit balance, so debtor's ledger plus minus must be transferred to the creditor's ledger. So creditor's ledger plus minus. So here we have a debit balance of 8.4, okay, as they've said. And to transfer it, I'm going to come here, I'm going to say 8.4. And to complete double entry, I'm going to come and say 8.4. So I'm going to come to my trade and other receivables minus 8.4. Then I come to my trade and other payables and I say again minus 8.4. Just like that. Okay. And then lastly, a loan adjustment. Loan adjustment. It reads, extract from the loan statement from PTA Bank. So balance as of the 1st of March was 1.4. So the difference between my balance at the beginning and my balance at the end shows me the loan that has been paid already, the capital portion of the loan that has been paid. If I say 1.4 minus 1,000,004, it gives me how much? Okay, let's say calculate, Mr. Simbi. 1,400,000 minus 1,000,004 will give me 396,000. That 396,000, the 396,000 is what we have already paid for this year. Paid already. Now, we are then told the directors expect to maintain capital remains made this year, this one, we're going to maintain during the next financial year. At times, they don't even include the statement. They just say fixed monthly repayments. All right? That simply tells you that we're going to pay fixed monthly repayments until the end of this loan period. So it therefore tells you that when this financial year ends, we should still pay in the next financial year. So in this financial year, we paid 396,000, paid already. And after we pay that, we are owing the bank 1,000,004. So I'll come to my non-current liabilities and I'll say my loan is 1,004,000. But in the next 12 months, I look forward to pay the same amount again, 396. So I'll come and say minus 396,000. And the 396, I bring it here and I call it short-term loan or current portion. current portion of loan. Current portion of loan. That is 396,000. 396,000. Okay. That is how I would do that one. So here we touched a couple of aspects here. We touched on your loan. We touched on debtors with a debit balance. We touched on shareholders for dividends as well. Let's go to one more adjustment before we touch on the cash flow. Okay, so this was another one that was a bit lengthy as well. And then let's quickly do it together. Let's start it right from the very beginning. So it says, information C, a supplier mid-rent tiles was paid 22,750. A supplier was paid 22,750. This amount was incorrectly debited to the debtors control account. This must be corrected. So you must understand that if you're in the debtors control, the debit side is the plus side. So we added 22,750, all right, which is an amount that was paid to a supplier. So what do? We come here and we take it out. All right. So remember that amount must go to what? To the supplier's account. That is a creditor. All right. So you are therefore going to come to your trade and other payables and you're going to say minus. Minus how much? 22,750. If you are to do it on the T accounts, remember, debit, credit is minus. And that should have been in the creditor's accounts. And here is a plus and here is a minus. So if we made a mistake and put 22,750 here, we added 22,750. To correct that, we're going to come and say minus 22,750. And to complete double entry, we're going to come to the opposite side. It's going to be 22,750 again. Hence, you see, we're subtracting it here. But in simple sense, if you pay the supplier, it decreases the account. Then we come now to information D. And it says, extract from the annual loan statement for the year ended, monthly repayments including interest, 27.5. The capital repayment of the loan for the past financial year was 126.6. This will remain the same. So we are given it here. And we are given nothing on the loan here, on the non-current liabilities. But let's continue. I know whenever something appears not to be there, it is hidden somewhere. You just have to look a little bit closer. Share capital and dividends. The company had 1,550,000 shares in issue on the 1st of March, we're told. Interim dividends were paid on the 31st of July. A final dividend was also paid. So I know once I see that, I'm going to come and calculate my what? Shareholders for dividends. So let me come here and say shareholders for dividends. How do I get that? I'm going to say my number of shares. How many shares do I have? 1,550,000. 1,550,000. I multiply that by what? 19 cents per share. So multiply by 19 cents per share. How much is that going to give you? Okay, let's bring the adding machine back into the game. 1,550,000. 1,550,000. Then we multiply that by 19 cents per share. That would give us 294,500. So that gives you 294,500 here. That becomes your shareholders for dividends. And then no shares were issued or repurchased during the year. Okay. G, or information G. Let's see what information G is saying. Calculated at the end of the financial year after all adjustments had been taken into account. Total assets, solvency ratio. But if I see total assets here, I know that if I am doing the accounting equation, it is assets are equal to owner's equity and liabilities. So if my assets are 5,214,000, that means my total equity and liabilities must also be 5,214,000 as well, because it must balance. Okay, so I was given that figure there. And we're then told solvency ratio. Solvency ratio. I know that financial indicators can be tested. So far we did the debt equity and we have seen the solvency ratio. And then let's go. And then we are now going to say my solvency ratio is total assets S2 total liabilities. S2 total liabilities. And then my total assets, it is 5,214,000. S2 total liabilities. All right. And the answer is 2.4 S21. We have been down this road before. You know how this is going to end. You're just going to throw a line here. That's how it's going to end. Where you're just going to end up saying 5,214 divided by 2.4. That's how it's going to end. So you come here and then you say 5,214,000. 5,214,000 and divided by 2.4. And it gives you 2,175,000. So my total liabilities are 2,175,000. That is my total liabilities, 2,175,000. That simply means if I take my current liabilities and my non-current liabilities, I should get 2,175,000. You good? If I take my non-current and my current liabilities, their total must be 2,175,000. That means I can get my non-current liabilities. How do I get my non-current liabilities? To get my non-current liabilities, I'll now say my total liabilities minus my current liabilities. So my total liabilities, it is 2,175,000. And I subtract my current liabilities, which is 972,000 over there. Then that will give me my non-current liabilities, which I put over there. But the calculation must be shown here. So I'm coming here now to say, okay, where are you, Mr. Edding Machine? There you are, my good friend. 2,175,000. 2,172,500. 2,172,500. 512,4,000. All right, let me see. What did I do wrong here? Let's go back again. If I did something wrong here, let's try to 2,175,000. Here we had how much? 5,214,000. Okay, let's do that again because here it is 2.4 S21. Yes, we come with 2,175,000. Yes, it's 2,175,000. So we're gonna come and then we're gonna say yes, 2,175,000 minus the 972,000. Minus the 972,000, and that's how we're gonna have our non-current liabilities. Our non-current liabilities, and then that is gonna give me my non-current liabilities of, there must be a 500, which is a loan 1,200,500. Loan that is 1,200,500. So I come here, my loan is 1,200,500. That is after I've taken the difference between these two amounts. Okay, let me go back again to my calculator and see what I could have done wrong. Okay, let's have the adding machine. So we have the 5,214,000, and we divided it by 2.4. 2.4. And it would give me 2,172,500. 2,172,500. Okay, 2,172,500. And then we subtract 972 minus 972,000. All right, that gives me 1,200,500, which is correct here. So I made a mistake in taking this figure down. Let's correct that one. It is 2 million. This one was 2 million. 2 million, calculator. Okay, it's 2 million. Okay, where are you again? Let's do again. That's 5,214,000. 5,214,000. We divide that by 2.4. Divide by 2.4. That's 2,172,500. 2,172,500. 2,172,500. Do we have the same figure now? Oh, thank you. Thank you. 2,172,500. Okay, it was a mistake on my part here. Okay, so it's 2,172,500. Okay, so you end up with 1,200,500 over there. And once you have that one, it simply means you can be able now to get your your equity and liabilities amount. Remember, you now need your ordinary shareholders' equity. You need your ordinary shareholders' equity. And to get your ordinary shareholders' equity, you are now calculating from the bottom going up. So you are now saying, let's see, you can see I'm punching figures a bit wrong here. So we're going to start from the bottom, which is my 5 million, which is my 5,214,000. And I'm going to now go and subtract the current liabilities minus 972,000. And I'm going to go subtract 1,200,500. And then I'll end up now with 3,041,500. That gives me 3,041,500. And therefore, that concludes this calculation. So I wanted to show you how you can also complete the statement of financial position at times when you're given financial indicators. Okay, we can take a 2-minute break and see if I can still continue. Okay, see you guys in 2 minutes. Welcome back. We are 23 minutes beyond our normal time, but if you see me coming back, it means we are still okay. Let's continue. I'm going to look at the cash flow statement. I'm not going to spend much time on this one. All right. So I'm just going to do certain simple calculations. As you see here, we're going to do calculations for taxation paid. All right. So the examiner can test this separately or can put this on the face of the cash flow statement. It would still be the same thing. But what we're dealing with here is very simple because we are given the 2 years. So this is an extract, as you can see. So when we're looking for SARS income tax, here's SARS income tax, and here's SARS income tax. All right. So under assets at the beginning of the year, there's no amount. But under liabilities, we have 148. All right. So we are owing for SARS income tax. So I'm going to take my 148,000. Several methods in which one could have done this. Others use negative signs to say because it's already a liability, then they put a minus sign. Okay. Still the same thing. So you have your 148 here. And then your income tax amount. All right, your income tax, how much is that? 1,736,000. So I'm going to come and add my 1,736,000. 1,736,000. And the closing balance is under your assets. That simply means you've paid more. Now SARS owes you. So you're still going to add it here to 220,000 there. And then it would give you your amount paid, which is 2 million, 104,000. But someone would have started it with a negative sign to say, because my SARS income tax is a liability, minus 148,000. And then goes on to say, my income tax is always a minus sign, minus 1,736,000, like that. And then once your SARS income tax is a receivable, it simply means you have paid more at the end of the year. So you're going to say minus 220 or so. And then in this case, you're going to end up with 2,104,000 in brackets, depending on what you are doing. Others would have opened a tax account where you would have had your balance as a liability. So your balance is going to be here. That is under the credit side. The credit side, there's the debit side. So you're going to have your 148 over there. And then you're going to close double lines. And then the closing balance is a debit, which is 220,000 over there. But we know this is balance BD. So the CD will be up here. The CD will be 220,000 over here. And then income tax is always on the credit side, which is your 1,736,000. So these are the three methods that one could have used. And then you'd come up with your amount there. So it all depends on what your teacher has taught you. Don't try anything new in the exam. Don't try funny tricks tomorrow. Just stick to what your teacher has told you. What you understand is what's going to give you good marks. Now, let's go to dividends paid. Dividends paid. On dividends paid, I know you know the shortcut already. What is the shortcut? Last year's final plus this year's interim. How much is last year's final? This is last year's final. How much is that? 840,000. That's last year's final. We need this year's interim. Then we are told an interim dividend of 32 cents per share was paid. How many shares are we having on this day? We were told the company had 3 million shares on 1 March. That is the beginning. Then they added 1,050,000 new shares. So that means they ended up with 4,050,000 shares. So if they're going to declare dividends, are they going to give it to 4,050,000? Now, you see here, we are told 50,000 shares were repurchased at R3.50. All right. So if shares are repurchased, are they going to qualify for final dividends? These were repurchased in October, and the final dividends are. So you're going to come and say minus 50,000. So you're going to end up with how much? All right. Let's see if they were given the final dividends. Shareholders were repurchased more than the average price paid. And then let's see if we can calculate and get the right amount. So let's see if we say 4,050,000 minus that, you're going to end up with 4 million here. Let's see. Oh, how are you writing, Mr. Simbi? All right. Okay. So we're going to end up here with how much? 4 million shares, because we have subtracted over there. So we're going to end up with 4 million shares. 4 million shares. All right. So let's bring our calculator, and we're told the dividends are at 32 cents per share. All right. So let's bring our calculator, and we are going to say 4 million. Remember, last year's final plus this year's interim. Somebody saying, Mr. Simbi, where are you going? I see what you're saying. Okay, so an interim dividend of 32 cents per share was paid on 31 August. Paid on 31 August. How many shares were we having? 4,050,000. We're having 4,050,000. That was before the repurchase of shares. That is before the repurchase of shares. So it's just going to be the 4,050,000. We're not going to come all the way here. That is going to be for final dividends. So we're just going to need the 32 cents here. Multiply by 32 cents. Okay. Someone was saying, Mr. Simbi, where are you going? So we're going to come here and we're going to say my 4,050,000. 4,050,000. Then we multiply by 32 cents. And then that gives me 1,296,000. 1,296,000 over there. Because we're giving interim dividends, we're going to give it to the 3 million and the 1,050,000. That is what we give our interim dividend to. 1,296,000. Then it end up with 2,136,000 over there. I know what you're thinking. Ms. Simbi, you must be tired. Guess what? You are very true. Okay, let's see if we can push it a little bit further, and we get to do fixed assets. Okay, let's see if we can do some calculations on fixed assets. When I began, remember, I spoke about the possibility of fixed assets being tested in both paper 1 and paper 2. All right, so we have done some calculations earlier on, but some simple ones here that might take us very few minutes. Count slow so that you can get me, that I can punch the calculator the right way also. Okay, calculate the carrying value of buildings on 1 March 2024. So we want this one here. This one is easy. You simply say your carrying value at the end, 15,479,600. Then you subtract your 7,909,600. And then you're going to end up with how much? 7,570,000. Like that. Are we okay? All right. We're good so far. Let's come to the next one. Calculate disposal of vehicle at carrying value. So we are told an old vehicle was sold at carrying value on 30 September. The cost price of this vehicle was 510. So remember what we did earlier on. We take the cost, 510, because we want the carrying value of the asset disposed. 510. Then we're going to say accumulated depreciation was 330 minus 330,000. And that would give us our carrying value. Let's see how much that is going to be. 510,000. 1 too many. 510,000, minus 330,000. That will give me 180,000 here. 180,000. That becomes my carrying value at the beginning of the year. And then we use the asset, so we're going to calculate depreciation. Now, how do we get that depreciation? We're now going to say that 180,000 multiplied by the depreciation, because we're calculating depreciation on vehicles at carrying value, multiplied by 20 over 100. It was sold on 30 September. So we're counting from the beginning of the financial year. All right. So how many months are we going to get? If we're counting from the beginning of the financial year, we are going to say March, April, May, June, July, August, September. Because here they tell us it was disposed on 30 September. So we're dealing with 7 months. 7 over 12. And then if we come here, we're going to say 180,000 times the 20%. Divide by 12 times 7. So it's going to give us 21,000. That's the depreciation for the year. Then I'll come and say my 180,000, which is my carrying value, minus the depreciation. Remember, carrying value at the beginning minus depreciation is equal to carrying value at the end. So my carrying value at the beginning was 180,000 minus my depreciation of 21,000. It will give me my carrying value at the end, which is 159,000 rands, like that. And then lastly, we come to the total depreciation on equipment. Here you have to remember to calculate for the son, sold, old, new. So we have the old in this case, and we're going to get a new or so. We are given information which is over here, and we are told the cost is 2,630,000. That is the cost, and that will be the old, because my additions is 320,000 over there. So I'm going to say my 2,630,000, and I'm going to multiply that by, what am I calculating? 15% per annum on cost. So I'm going to say multiply by 15 over 100 times 12 over 12, because it is old. The old is always 12 over 12. I'm going to end up with 394,500. Let's come to the new. The new one is this one here. And it's going to be 320,000. Then I'm going to multiply that by 15 over 100. And when did the new equipment come? On the 1st of December. December, January, February. That's 3 over 12 months. 3 over 12 months. And that will give me 12,000. That will give me 12,000. And then we're going to add, and then the total here is going to be 406,500. 406,500. That becomes my total over there. You have to understand that when you have additions, these ones would go into a cash flow statement under your investing activities. That is your purchase of fixed assets. So you're going to add that one and this one. And then this amount here, it depends on what amount you have sold the asset. An asset was sold at carrying value. So that would go as proceeds from disposal of fixed asset. So remember, you need to know this as it will assist you in doing your investing activities of the cash flow. Okay, I'm going to move on to the next one. And we're coming to financing activities before we conclude this part, and then we see what we can do. Two sources of finance for a company: shares and loans. Shares and loans. And the moment you see something like this in an exam, it's an advantage to quickly come here and just open your ordinary share capital note. You're talking note number 7. And you are saying the company had 3 million shares. So you're coming here. Yes, 3 million shares at the beginning. And then do you have any amount? Yes, 13,950,000. So 13,950,000 there, like that. And then they say 1,050,000 new shares were issued. 1,050,000 new shares were issued. All right. And we received 6.3 million. All right. So that 6.3 million already, you take it, and you're coming here to say proceeds from issue of shares. And that is 6.3 million. 6.3 million. Proceeds from issue of shares. And then the next thing is they say 50,000 shares were repurchased. So I'm coming here to open bracket. 50,000 shares were repurchased. So here we're told at 350 above the average. So you remember the triangle. You remember the triangle. That here you're going to get your average price. This is note number 7. Here you're going to get the above average. Above average. That's your retained income. That's note number 8. And the top part is always the cash flow. All right. So we will need to know the average price. And for us to do that, you have to remember that you have the beginning, you have the addition, you have the repurchase. Okay. So how do you do that? Here you can simply get your average price because you are given this 2. You're given this 2. So if you add these two amounts, you add your 30,950,000 and you add your 6.3 million and you divide that by 4,050,000. Let's see if we can do that on the calculator. Let's see if we can do that on the calculator together. All right. Where you, my friend? Are you tired as well? Now, 13,950,000. We are adding that. Then we're adding the 6.3 million plus 6.3 million. We can end up with 20,250,000. Then we divide that by the 4,050,000 shares here. We divide that by the 4,050,000 shares. And that will give us 5 rand. So that 5 rand becomes our average price. So when I come here, I have 5 rand, which is an average price. And I know that we have paid 3.50 rand above average price. So it's my 3.50 rand plus my 5 rand will give me my cash flow amount, which is 8.50 rand. 8.50 rand. So when they say 50,000 shares were repurchased, I'm going to come here and I'm going to say repurchase of shares. I'm going to say the 50,000 shares, and I multiply that by my 8.50 rand. And then you're going to end up now with an outflow of 425,000. So what the examiner times can do is they can give you an extract of the retained income, and maybe an extract of the note number 7, and then they don't give you any of this information. You should be able to know that the amount from the ordinary share capital plus the amount from the retained income is what we take to the cash flow statement. So that can happen at times where you are not given such information, but you're given the amounts from note 7 and note 8. You should just add the 2 amounts and then it takes you there. And then the last part of this area here has to do now with our loans. All right, so we're coming to non-current liabilities. As you can see, there's an increase here on our non-current liabilities. Okay, so it is proceeds. Okay, so it is an increase, or it is an increase in loan, or proceeds from long-term loan. Okay, so it can be proceeds from long-term loan. All right, so our loan was 2,780,000, but our loan now, our non-current liability here, our loan, it is now 6 million. So the difference simply means we have received a loan. So it is my 6,513,500. And I subtract the 2,780,000. So if I come here and I'm going to get the calculator again, it is my 6,513,500. 6,513,500 minus the 2,780,000. And that should give me how much we've received. 3,733,500. 3,733,500. This is what we have received. When your loan is increasing, it means we have received some finance. Remember, 2 sources of finance: shares and loans, own and borrowed finance. When your loan increases, it simply means we have received a loan. And when your loan decreases, it means we have repaid back a loan. And the last part that I'm going to talk to today, it is the part at the bottom of the cash flow statement, which is your net change in cash and cash equivalents. Your net change in cash and cash equivalents. So here is the answer book. But this part, the examiner can test it in many different ways. All right. And then, so what we're given here, we're given the amounts at the beginning. This is the 2023. So I'll come here and I'll say, cash and cash equivalents is my 25,000. But I have a bank overdraft here, which I'm going to subtract minus 124,500. So my bank overdraft must be subtracted. So I'm going to come here and I'm going to say 25,000, and I'm going to subtract 124,500. And that is going to give me a negative 99,500. 99,500, a negative like that. And then I am given in 2024 now, that is at the end, I'm given 427,685. So what I need to get is that one there at the top. So on your calculator, you should be able to do calculations from the bottom. That is 427,685. 427,685. And then we say plus, because when we go up, we change the sign. So it becomes 99,500. We change the sign, becomes a plus 99.5, and then we end up with 527,185. 527,185. And that is the last part. My good learners, I've been allowed to do analysis and interpretation, so I'm just going to do it for the next 5 minutes, and let's see. All right, analysis and interpretation of financial statement. Okay, but before I do analysis, there was a bit of calculation, so I'm going to do a bit of calculation of financial indicators. But when we are here, it is very important that you know that the cash flow statement, remember there's a note as well to the cash flow statement. So make sure you do go through that one as well, where you have your changes in working capital, your increase in inventory, decrease in trade and other receivables, and trade and other payables as well. Make sure you understand that area as well, because examiners can also test that particular aspect and the entire cash flow statement. It can be tested as an entire thing or broken down into different segments. And we come now to certain financial indicators that need to be calculated. Let's see. The first one, we're going to calculate the net asset value per share, NAV, net asset value per share. Remember, I did indicate to it that the examiner can also link this to a statement of financial position. And so already you know your formula from your formula sheet at the back. All right. So you know that if I'm calculating NAV, remember we're in 2023. So I'm going to take my shareholders' equity, which is my 10.2 million over here, 10.2, and I divide this. So I say my shareholders' equity, and then I divide it by the number of shares, net asset value per share. So I need the number of shares. So the number of shares is 1.2 plus 300. That's 1.5 minus 90, those that we repurchased. So it's 1.5 minus 90. That is 1,410,000. 1,410,000 shares. And we multiply by 100 cents, because my answer has to be in cents. And if you do this, you should get your 723.4 cents. 723.4 cents. I'm going to move on and do another calculation as well. Here's the next one. Let's go. Here's the next one. So we have done the NAV. We're going to calculate our dividend payout rate. We're going to calculate our dividend payout rate. All right. So our dividend payout rate, we know that it is DPS over EPS. DPS over EPS. So when we look at the information, we are given the EPS, which is 66.2. And when we need our DPS, so this is final for the previous year. So we don't need this one. Okay. We are given interim. So our dividends per share, we know it is this year's interim, which is 30 cents. But we need final dividend for this year now. All right. Do we have the final dividend for this year? We don't. So we need to get this one here. So to get that one, we'll come now and then we say shareholders for dividends here. These are our final dividends. All right. So we have given 282,000 rands. And to how many shares did we give it to? 1.2 plus 300, 1.5 minus the 90, 1,410,000. These are the shares that we have at the end. So if I have paid 282,000 rands to 1,410,000 shares, how much did I give per share as a final dividend? So I'll come, then I'll say 282,000, and I divide it by 1,410,000. That is going to give me 20 cents. So I'm going to come here and I'm going to say my final dividend then is 20 cents. So I now have my dividends per share, which is 30 plus 20. That gives me 50. So 50 is my dividends per share. I divide that by my earnings per share. And my earnings per share is 66.2. All right. Remember, the dividend payout rate has to be a percentage. So I'm going to come and I will now say it is my 50 divided by 66.2. And that is going to give us an answer that is, remember, percentage, Mr. Simbi. And then you end up with 75.5. 75.5%. The dividend payout rate. In this year, the directors have declared 75.5% of earnings as dividends. 75.5% of earnings were paid as dividends. Okay, I'm going to come to the financial indicator, but to calculate it, let's do it over here. Are we going to do it here? All right. Yes, I think we're going to do it here. All right. So I think what I did, let's go back to it. Let's calculate it here. Let's just do it over here. Percentage return on average shareholders' equity. Percentage return on average shareholders' equity. Okay, let's see if we're able to do it together. Okay, but what I can do is to come here and calculate it from here. Let me calculate it from here. So I'm going to do this one, and I just do again the percentage return on average shareholders' equity here. Okay, so first let me do this one here, the operating expenses on sales. So to do that one, you're just going to say your operating expenses. Remember, in the question is the formula. It is your operating expenses on sales. So it would therefore be your operating expenses, which is 4,667,600 on your sales. Your sales is your 26,480,000. And you multiply this by 100 over 1. And then you should get an answer which is 17.6%. That becomes the answer to this one here. Okay, so in the previous activity, remember we left the percentage return on average shareholders' equity. Let's do it here now. So what is the formula now? Remember, it is your net profit after tax. So you are taking your 4,464,000. All right, and it has to be over average shareholders' equity. So average shareholders' equity, I'm going to say my beginning shareholders' equity. It is my 14,913,000. And then I'm going to add my shareholders' equity in this year now, the ending one, which is my 22,556,000. And then we multiply everything by 100. This is very key. You have to average it. You have to average it. And then the answer here is going to become 23.8%. That is what you end up with. And then, when I'm still here, please take note that you practice on this financial indicator, because in most examination papers, if you're not tested on the Rocher, maybe they'll test you on the Rotse as well. So make sure you have balanced very well. And when the Rotse comes, it usually demands more marks. I have alluded already to the dividends per share, but maybe some of you did not see how I did it earlier on. So I'm going to calculate again my dividends per share. All right, so for me to calculate my dividends per share, you have to know that I have to get my interim plus my final. If you check on the formula sheet, you will see that there is an option where you can say your ordinary shareholders dividend divided by the number of shares. But then there's also a part where it gives you the option to calculate the interim separately and the final separately. And it gives you an asterisk to say, once there is a change in the number of shares, then you use the weighted average method. How do you do that? You calculate interim separately and you also calculate your final separately. So when you come here, you're now going to say, an interim dividend of 32 cents per share was paid. So I'm going to come here and say 32 cents, there it is. But then we need our final dividends. We need our final dividends. And for our final dividends, how much were they? We have shareholders for dividends here, which is 1.4 million over there. And we divide this by the number of shares. How many shares do we have? We have 3 million plus 1 million and 50, 4 million and 50. You remember this particular question here? You remember it. Okay. And then we then come and then we say 50,000 shares were repurchased. So we come and we subtract the 50,000 shares. So we now end up with 4 million. So the 4 million is where the final dividend was declared. Okay, 4 million shares. So I can now come and say my 1.4 million rands, 1,400,000 rands was given to 4 million shares. To 4 million shares. How much was paid per share? Oh, I don't see my calculator now. Where are you? Thought the battery was finished. It's been a long day, guys. It's been a long day. 1.4, and then we divide now by 4 million. Okay, by 4 million. All right, so we divide that by 4 million. How many zeros? 1, 2, 3, 1, 2, 3, 6. And then we end up with 35 cents. So it becomes 35 cents. And then eventually you end up with 67 cents. 32 plus 35 is equal to 67 cents. My good friends, I have done my best. I should have finished exactly at 4. We tried to push it an hour. Unfortunately, here in studio, we have guys that will be traveling very far, as well as myself. So I will not be able to do analysis and interpretation of financial indicators with you, but you should be able to go through it and be able to do these financial indicators, that is the analysis. And here is the formula sheet that I've been talking to. So you must go to the exam knowing. And remember, I spoke about color coding it. You can take your markers and you can highlight it so that you know, here is my liquidity financial indicators. Here's my solvency. Here's my acid test. As you can see here, there is our financial indicators here. So these are our profitability and operating efficiency as well. So we have your profitability here, and this is the liquidity financial indicators. So you can see there is the debt equity coming in here in between your liquidity. So at times the examiner will say, comment on the liquidity. At times they can talk about the working capital. All right. If we had time, I would have shown you even in the worksheet that we have prepared. And then you also have the liquidity financial indicators continuing over here. And then here is your ROTSE, the longest one. And then you should continue. All right. So this is what I was talking about earlier on. If there's change in the number of shares issued during the financial year, the weighted average number of shares is used in practice. And then once you know this, remember to mind your time. Don't waste too much time on one topic. If you're having challenges, move on to the next one. Display your workings to earn part marks. Knowledge of formats for financial statements is very key. My good friends, don't forget to practice on your analysis and interpretation because time is no longer on our side. Please do your auditing and corporate governance, and you need to practice other adjustments as well. Well, it's been a long run, a couple of mistakes on the road. What would accounting be without punching the figures incorrectly on the calculator? But once again, I want to thank you for joining me in today's class, and I want to wish you all the best tomorrow. You know what? I know you are ready. I know you've put in the time. I know you've put in the hours. It's not easy to also sit on a smaller screen. At times you're watching from your cell phone. Some of you are still in school. And I take my hat off to you and say, I salute you. I know whatever you are doing, you are going to get a reward for it. Tonight, make sure you tie up all the loose ends. When you get to the exam venue tomorrow, go in there confidently. Start with what looks easy to you that will boost your confidence. I'm about to say goodbye. Remember, we meet again on Monday as we prepare for paper 2. Until next time, I wish you the very best tomorrow. I have no doubt you're going to ace the paper. Enjoy tomorrow's paper. Goodbye and take care.